Hello there, this is Marcus once again, the financial accounting tutor, and I empower students to succeed. I've been helping students a long time in financial accounting, and let's jump right into this problem. So, in the process of reconciling its bank statement for April, Donahue Enterprises accountant compiles the following information: cash balance per company books on April 30th, 6275, deposits in transit at month end 1300, outstanding checks at month end 620. Bank charge for printing new checks, 45. Note receivable and interest collected by a bank on Donahue's behalf, 770. A check paid to Donahue during the month by a customer is returned by the bank as NSF, 480. So this is a bank reconciliation problem. And the way I always tackle bank reconciliations is you have to figure out where the information is already at. If it's already on the bank side, then adjustment's going to be on the book side. If it's already on the book side, the adjustment's going to be on the bank side. So hopefully this will make sense in just a minute. So we're trying to find the adjusted cash balance per the books on April 30th. So we're just looking for the adjusted side on the books, not the adjusted side on the bank. So first, let's start off with our balance. Company books, 6275. Let's make this a little bit bigger. All right, so now since we have now we got our balance per company books, because remember, when doing a reconciliation, you're comparing the book side and the bank side, and they have to equal each other. If they don't, that means you did something wrong. So we're only worried about the book side in this problem. So now we just got to figure out where this information goes. So deposits in transit at month end. Deposits in transits are deposits that you received already, but they haven't cleared the bank yet. So, for example, let's say you get a deposit on February 28th and you deposit in a bank after, late at night. It's not going to hit the bank until March 1st. So it's going to be a deposit in transit for, February. So now we just got to figure out where it goes. 1300. Well, deposits and transits, we've already received the money, so we've already entered it in on the book side. So that means the adjustment's going to be on the bank side. So the 1300 will go on the bank side. We're only worried about the book side in this problem. So the 1300 is not going to affect us. That's already included in the 6275. Outstanding checks at month end. Outstanding checks are checks that we've written, but hasn't cleared the bank yet. Outstanding checks are already on the book side, so that means the adjustment is going to be on the bank side. Once again, this doesn't affect us because we're only worried about the book side. So the 620 is already included in the 6275. Bank charge for printing new checks. So, you get your statement at the end of the month. Some banks have a bank charge. So the bank charge is already on the bank side. So we need to put this on the book side. So we got bank charge. Bank charge is going to reduce our cash balance on our book side. All right. So note receivable and interest collected by a bank on Donahue's behalf. The key word is collected by the bank. That means it's already on the bank side. So this is going to be on the book side. Note receivable collected. So we're going to add the 770 because that's going to be on the book side because it's already on the bank side. A check paid to Donahue during the month by a customer is returned by the bank as NSF. I know you're probably thinking, what does that mean? Well, let's stop and talk about it. So, a check paid to Donahue. So, a customer gave us a check during the month of April. We went to deposit that check, but it didn't clear because that customer did not have enough money in its bank account to pay us. So I don't know if you ever heard of the word bouncing a check. That's basically what it is, a bounce check. We tried to cash it. We couldn't cash it because there was not enough of a balance in the customer's account. So let's stop and think about what side is this already on? Well, since it was returned because it bounced, and we didn't know it bounced until probably the end of the month, the bounced check is already on the bank side. It's already not on the book side because we don't know about it yet. We wouldn't know it until we got our statement. So now the question is, are we going to add this or subtract this? Well, when we received the check, we assume when we received the check on our book side, our cash went up because we thought we was going to get that money. But now it's going to go down because we're no longer going to receive that money. We thought we was going to receive it, but we didn't. So now we thought we was going to receive 480. We put 480 in our accounting system. Our cash went up. Now we know we're not going to get paid because our check bounced. So now we need to subtract 480 from our book side. So NSF check. And then we need to do minus 480 because it's going to reduce it. So now all we have to do is add up our numbers, and that is going to give us our answer. And we've got 6,520. That is going to be answer D. Just remember, when doing a bank reconciliation, you always have to think, what side is this going to affect? If it's already on the book side, such as outstanding checks and deposits in transit, that means the adjustment is going to be on the bank side. You just need to remember that stuff when it comes to bank reconciliations. If you do that, you can tackle any bank reconciliation problem. Once again, this is Marcus, the financial accounting tutor. I hope you enjoyed this video, and you take care and enjoy the rest of your day.